My name is Evan Trades, and in today's video I'm going to be showing you guys ICT's 30-second model on how to trade it and how I believe it's one of the best models out there for high strike rate or consistency. Okay, and just to get right into it, just so there's not a bunch of yapping, let me explain to you guys how the model works. So, first thing you want to look for in the 30-second model is you want to look for a 60-minute or 15-minute swing high or swing low that price is gravitating to, levitating to, or most likely gonna head to, right? So, and this is no daily bias, nothing. You don't need a daily bias to trade this or anything. So you could have a bearish daily bias, but you could take buys with this model. Like it's, yeah, without having to get too deep in it, but yeah, it's possible. So to get right into it, you're going to look for a 15-minute or a 60-minute swing high or swing low drawn liquidity. Then once you find that, once you're confident in that bias, you drop down to the 5-minute chart or 1-minute chart. And for example, for bullish, we're looking for a 5 or 1-minute swing low to get taken out. And as soon as that swing low gets taken out on that time frame that you're waiting for the purge of liquidity on, you're looking for a candle close up. A candle close up after that swing low is taken out. And once that candle close up has happened, you drop down to the 30-second chart and you buy the first rally gap. And depending on your comfortability, you can put your take profit at 10 handles, risking 12, or you can all the way up to best case 15 or 20. But if you're a beginner in this model, then it's better if you start from 10 and then slowly gradually make your way up 10 to 20 and then 30 and then but yeah, and then let me show you guys right now on the charts how to properly execute this. So right now we're on the NASDAQ, we're on the 1-hour chart, and it's at 9 a.m. on Thursday, and let's just point out the swing highs that we have. So the ones that stand out to me are this one right here and this swing low right here. And yes, I see these here, right? I see these swing lows and swing highs right here too, but I like to give price some wiggle room to levitate towards it. That's just my personal preference. So we've identified our swing highs and swing lows. The next step I do, or what you want to do, is point out any PD arrays that are being respected or disrespected. So what comes out right here? This 1 hour for value gap seems to be getting respected. And how do I know that? Look at the bodies right here, respecting this PD array heavily. And when bodies are respecting PD arrays, then that is 100% of the time, well, maybe not 100% of the time, but most of the time it's a confirmation to your bias, and it helps. And so in this case, I did trade on this day. It was confirmation for a bullish bias for my day. The body's respecting this bullish PD array. And then I also saw this 1 hour for value gap also right here. And then let's zoom out to the 4 hour, see if there's anything. And then we are in a bullish 4 hour for value gap also. Let me turn off magnet because it's actually like annoying. Okay. All right, and as you can tell on this 4-hour fair value gap, the bodies are respecting this 4-hour fair value gap. They are not closing below, which is a very, very good sign. Very, very good sign. And so that was another confirmation to my bullish bias in the morning. Okay, go down to the 1 hour. Make sure we don't miss anything. Oh, oops, sorry about that. Okay, and then if you want to look for other swing lows or swing highs that you might want to look for, if you can't find one in the 1 hour, you can always go to the 15-minute to look for some. And there is a few more that you can see also, but we're just going to stick to the 1 hour swing highs and swing lows. So, and it looks like right here we have a bigger 15-minute imbalance also that price does seem to be respecting just after market open, which is a very, very good sign. And just for the sake of this, we'll put the consequent encroachment. And so at this case in the morning, in this case, I was pretty bullish in the morning. I really had that bullish flow, the bullish thoughts inside of me. And I was ready to take a bullish setup. So after seeing these candles respect this 15-minute PD array, seeing this respecting right here in this 1 hour PD array, I wanted to see maybe a couple more 15-minute candles, bullish 15-minute candles. And so like we did here, personally you don't have to do this, but this is what I like to do. And after seeing this was pretty much my confirmation with some pretty bullish order flow that we were looking for higher price. And so what I did was I dropped down to the 5-minute chart. And what do we have here? We have 2 swing lows that we could possibly take out. Mark this out right here. Mark out here, and then we're going to mark out this one right here. Okay. Now we're just simply going to wait and see if price takes out these swing lows. Okay. Price takes out that first internal swing low, but no candle close up. Okay, price takes out this other swing low, this external swing low. Now we're just going to wait for a candle close up. Okay, and looks like we do. And we're still sticking to the bias. A lot of people will see this very, very bearish move, and they'll automatically change their bias. A lot of new, very, very new traders, and I used to be like that. You know, I'd see this and I'd be like, oh yeah, we're bearish for the day, even though it's like not really like, no, I've learned my lesson. That's not what that means. You have to stick to your bias. Even if you see a down move play like this, once you understand the markets really, and I'm not claiming to understand everything about the markets, but what I do know is that for the real dynamic price runs to happen, as ICT said, there needs to be a purge on liquidity for those nice dynamic speed runs on price. And so whenever you get big movement like this down and you get a purge on liquidity, then it's possible that the real price run could start. So it's not always a bad thing when you see this. And hopefully new ICT traders can really understand that. But it does take screen time to really trust yourself with it. Anyways, back to the model. So we got a 5-minute up close candle. And once that closes, we drop down to the 30-second chart. Okay. And now there is fair value gaps that have been traded into, but if this is the case in your scenario, then we're simply going to wait for we're simply going to wait for another one to form. And I typically like to wait till 10:30 to cut off my trades or look for trades personally. Some people stop at 8:30 for the New York session. Anyways, we have a fair value gap right here. Okay, just gonna mark it out. Let me get rid of that actually. Okay, just gonna mark it out like that. Okay, and then we are going right there. Okay, so for the beginner ones, we're just gonna put a 10 handle take profit and a 12 handle stop loss because that's what ICT Sun was doing. And let's just see how it plays out. Get entered. And looks like it takes our take profit. Now, as I said earlier, it is possible you could take 15 point take profit or 20. It's totally up to you. But I recommend over time to slowly, gradually do it over time. But for the sake of the video, let's grow it and see. So let's move it up to 20. And let's see if price hits that. And it looks like it does. Okay. And you know what, just for the sake of it, let's go to 30 handles. And I'm not saying it's going to hit 20, 30 handles every time, but just for the sake of the video and the setup, I just want to see. Okay. See if it's respecting this PD array. Looks like it is. And it looks like it hits that 30 handle mark. All right. So that is essentially, not essentially, I mean that is the ICT 30-second model. So if you plan on having your take profit at 15 or more, to keep that high strike rate like this model does have, because this model does have a high strike rate, very, very high strike rate. I recommend trading micros so you can have take profits or partials in between, just so you can have a higher win rate with that instead of just playing one contract and then hoping it hits your take profit, blah blah blah, and all that. But yeah, guys, that is the ICT 30-second model. Go ahead and give it a try in the charts, back test it, do whatever you want. Back test it with 10, 20, 30, 40, or 50, however you guys want to do it. But yeah, this strat really helped me a lot. It's very simple, very simple, which I really liked. Because in trading, it does need to be simple. It really does. And I've really fallen in love with this model, with how simple it is. But I really hope you found this video helpful, all you guys. If you want me to make any more videos, anything ICT related, please let me know down in the comments. And yeah, that's pretty much it.